Good morning, everybody. We just like to thank everybody that showed up today and people in the audience and people that are speaking today. I appreciate everybody. Just wanted to make sure that everybody got information that is now happening and maybe in their lives or maybe in the future that they might be thinking about right now. So this has been on my heart to get this done. So I want to be able to have everybody get whatever help they need today, and whether it's real estate, we have speakers here today that are going to speak on estate planning. We have Mr. Don Swaim here today, and he's with Swaim, Carlo, and Ames, and he's going to have some information for you guys. And any questions you may have, you can type them in the chat or ask in the audience, and then we can have that question and answer time, and then after that we will have the other speakers as well, and we'll go ahead and get started. So how many years?
Thanks, Julian. I appreciate you inviting me to be here today.
So I just wanted to find out, like, how many years you've been in the business, what your degrees or awards or things you won, and then what your specialty is.
Okay. Well, I'm a lawyer and CPA. I began my career with the IRS. I was neither a lawyer nor a CPA at the time. Some reason they hired me anyway. But I worked there for 7 years doing audits of individuals and businesses, and then really quit to go to law school here in UNM. But I've been practicing over 30 years. Our law firm, there's 5 lawyers. We all specialize in estate planning, doing wills and trust and probates, and helping people through the kind of the passing assets from one generation to the next. We also do business setup, help people sell businesses, just about anything where you don't have to sue someone. That's what we do. Yeah.
Well, good. And so is there any particular, probably the most asked questions that you might have as an attorney that you get?
The thing that seems to be the most confusing for people when you talk about estate planning is how a will works. It seems simple. You know, everyone thinks, well, if I do a will, you know, that's the instrument we use to plan our estate. What a lot of people don't get is kind of the punchline is, for a will to work, you actually have to go to court and probate the will after someone dies. The confusing part is that wills don't work automatically. They need the court's help to work. What the court does is appoints the person you've named to be in charge and gives them official papers where they can go around and gather up your assets. The confusing part is that if my Aunt Mary died, my Uncle John inherited everything, and he didn't have to go to court to get those transfers made. And what's confusing about it is the family all thinks the will did the transfer. And so they think wills work automatically. What actually happened is Mary and John owned all their assets jointly. Mary named John to be her beneficiary on the IRA, on life insurance, and they own the bank account together, they own the house together as joint tenants, and what the state law says is if you're joint owners on a property, when one of you dies, the other one automatically inherits that. So that confuses people. So that's number one thing that really I like to clarify when I talk to people.
And I did have that question this past week about that, and you know, people are always asking these kind of questions that I really don't. I mean, I kind of have the answer to them, but I'm not an attorney, so I always reflect to call an attorney, estate planning attorney. So another thing that I think a lot of the times people are confused about is the difference between, if I have a will, then I'm clear, but then they still have to go through probate, and they may not understand that as well.
Yeah, and probate, I think a lot of people think probate ought to be a 4-letter word because they don't enjoy the process. We've done several hundred probates over the years, and Julian, we've never gotten a thank you note afterwards saying, gee, that was fun, or thank you, that was a nice process. So a lot of people say, well, what can I do? I mean, do I set everything up as joint ownership? It works good with married couples. Joint ownership has some baggage that you don't want to carry with you when you talk about using that same method for kids. For example, if you put your children on your bank account, you won't have to go through probate on the bank account. But if one of the children gets sued, they're in an accident and get sued, your bank account's in jeopardy. So that's not a really good way to handle things for non-married couples. So the question is, well, what do you do? Well, that's when people start thinking of doing a living trust or a revocable trust, which the whole mention of trust confuses people, but all they are is fancy wills. They're wills that don't have to go through the probate, through the court in order to work. You do the same thing in a trust that you would do in a will. But because you use a trust law says they work automatically. So your person in charge pays the bills, distributes the assets, and they're done. You barely need a lawyer. The only thing you use a lawyer for is just if you have questions.
Yeah. So now let's just say they didn't get the living trust, and let's ask the question of what would the cost be if you had to go through probate versus if you did have the living trust. So there's always a cost difference, and we want that to be,
Yep.
realized.
Different law firms charge different amounts, but just the average seems to be minimum of around $4,000 to about $6,000. That's if there's no fussing or fighting, nothing unusual going on. It sounds like a lot of money. It's actually a little more expensive to do a will and then go through probate than it is to set up a revocable living trust. The difference is you're paying more on the front end. So with some families, that's a big issue, so they go with a will and a probate.
So how important that is to have a living trust ahead of time, in which a lot of people don't understand and wait till that time comes. And when that time comes, then they think about it, and then it's too late. So it can be very difficult for a family to have to go through this. If you have several family members, you might have blended families these days. Almost everybody is, it seems like. So with the blended families, that might entail a lot of other issues with the families that are involved.
It does, and then the number one thing we see mess up people's plan when they use wills is they don't understand that the will only picks up things that don't get transferred automatically. So your beneficiary forms trump the will. So if your beneficiary form says you're leaving your life insurance to one of your children, the will says everything goes to all three children. Most people I talk to think the will controls in that situation, but that's not true.
Okay.
The beneficiary form trumps the will. Joint tenancy trumps the will. So what you need to do is make sure that your ownership of your assets matches what your will says.
That's good. So is there any questions that you have there, Daniel, from the chat, or anybody that might have questions for Mr. Swaim? No questions? Any questions from people? Do you have any questions?
How detailed do you have to get in the living trusts? I mean, do you have to go through your house and like everything, or can you just make it generic, everything goes, or is it divided evenly, or how does that work?
Okay, I'll repeat that question so everybody can hear it. How detailed does that have to be on the living trust, and as far as information and what has to be distributed?
Yeah, well, it has to be listed in the trust and put in the trust. Actual transfer of ownership, we're going to be real detailed, but for personal property, that was one of the things you mentioned is, do I have to inventory all the assets in my house? The answer is no. We have a little simple form, bill of sale form, says generically I'm transferring all personal property to my trust. But what you also do is you go to the bank and change the name on your bank account. It's the same account number, just change the name. It's very simple. You change your beneficiary form, instead of naming your wife or your children, you name the trust. We do a new deed on your home. You transfer it to yourself as trustee of your trust. It's a really very simple process, and what the lawyers like us do is give you information, give you some guidance so that you can do most of that yourself without having to pay someone to do it.
Mm. So that's very important as far as how much money you're spending up front compared to what it could be a disaster after the fact.
Yeah.
So any other questions?
I have a question, yes. So are you recommending that we get a living trust instead of a will?
It all depends.
So let me repeat that question real quick.
Yes.
Another question we had was, is it recommended to get a living trust instead of a will?
Yeah, it all depends. For young couples, expense is a big deal. When you start having children, you really need to do a will and a power of attorney because you need to name guardians to raise the kids if something happens. But we don't think young people are going to die. It's usually just the safety valve in case something unusual happens. As you get older, people get pretty close to the end of their career. They've accumulated a lot of assets. They can afford things more. That's when most people start switching to a trust. So not everyone needs a trust, but if people understand how they work, anyone that can afford it, they will be better served. Their family will be much happier if they use a trust. I do get thank you notes from people's families that use trust.
So what does that tell you? So any other questions from even the speakers here? If you guys have any?
That was great.
Any questions at all? Any other questions? Any from the chat? Do you have any questions?
Well, Julian, you mentioned just something that just now popped in my head. You mentioned something about blended families, stuff like that would be more, of a occurrence. And, I'm seeing it as well too, putting together plans. So, in the effect of a will, if say the, custodial parent that you're married to, and you're not exactly the child's, biological parent, but you're also not an adoptive parent yet, and let's say that custodial parent passes, how can a will help you maintain that relationship, not just like, financially, but just to make the process a little bit easier, because say somebody has like an 8-year-old or that they've raised since 1 or so, how can a will or something help in that situation instead of the child just going to, their biological and then all ties are severed at that point?
So basically, the question is, if you have a blended family, it's not your biological kid, but not adopted either, and something happens to the biological parent that you're married to now?
Yeah.
That you're married to now, if something does happen to that biological parent, how does that happen with the child as far as care and as far as maybe money left to whoever is, and how does the will come into play?
Yeah,
in that kind of stuff?
and another part of that was just the relationship itself. How do you can you, with a will, power of attorney, or some other instrument, assure that you're going to have a continuing relationship and maybe control over what happens to that stepchild, basically. You can plan for a lot of things with the will. You can provide for that child. Like the will could say, the biological parent says, I want half of everything I own to be retained for my child. The will would say that the money would be put in a trust, a trust that's created by the will, and it could appoint you, the husband, non-father, as the trustee of the trust, so you would have control of the money. And the will could name you to be the guardian of the child. The problem with that is if the biological father is still living, he's got top priority to be the guardian. So I see sometimes relationships are broken, but if you've got that trust and you're the trustee, the biological father is calling you to talk about what the budget is and how much money needs to raise a child, so that keeps the relationship going. If your spouse is incapacitated, you cover guardianship with the power of attorney form, and it's pretty much the same. Is because it's still her money, but you're managing it as her agent. And that, again, helps you keep that relationship going.
That's good. Thank you so much.
You're welcome.
We're not done yet, but is there any other questions? Did you have any questions, Julie? So I wanted, Mr. Swain, we thank him for being here today and question and answers, but also, if you guys have any questions, and I don't know if there's a phone number there that you guys can reach out to him. Here we got some materials in the back if people want to grab some materials and reach out to him, but he will give a consultation. I'm
Yes.
not sure if he charges or not for.
No, we never charge any fee for just initial consultation, because people don't know if they need anything. We don't know if we're going to be able to help. So just come by, schedule something. We'll happy to visit for an hour, hour and a half, and give you some good information.
Okay, and I thank you so much for coming out today and appreciate your time that you've given us and everybody out here. And thank you again. So
Thanks, Julian. Appreciate being part of this.
thank you. So next we have up a financial planner, Adon Martinez, and he's with PHP, which is People Helping People. He will give his information as far as how long you've been in the business, what kind of awards or things that you've done, maybe schooling or whatever background, and go ahead and give your information that you have accomplished so far.
So my name is Adán Martinez. I am from Santa Fe, New Mexico. I actually started with People Helping People agency in October of 2018. I've been in business for about 3 years, partnering up with Ryan Nenery. He's been in business for 6 years. We've been running the New Mexico region for the last 3 years together. We help people with life insurance, living benefits. We help people with mortgage protection, help people with annuities, which is basically protecting people's assets from retirement money, so that it doesn't go away when market goes down. We help people with living benefits, which in case people cannot work, they get injured, they can actually use life insurance while they're alive. We represent multiple companies. There's multiple companies. There's insurance agencies and there's brokers agencies. So what we do is that we actually gather different companies so that we can provide and design the best solutions for a customer. Mm-hmm. Let's say that because your situation is different than my situation, than other people's situation. So in this case, if you go with an insurance agency, really good, by the way, really good at what they do, but they only serve one product. We serve multiple products in case one company has like a better life insurance, another company has a better retirement planning, investment planning, another company has a better college fund for your kids. We actually customize and design so that we can actually help the customer better.
Awesome. So the difference is he's more of a brokerage, so he has different opportunities to reach out to different companies that can give you the best deal and maybe serve your situation better. So where other companies are just tied into one way of doing business and that's it. So that's really huge on his part. So what's the most like situations, maybe a testimonial that you can give that you've helped somebody out in their financial situation?
So we have several. We do three things. We help people get out of debt. We help people and families get protected just in case something happens or they can no longer work, and also transferring wealth with retirement planning. So when it comes down to getting out of debt, we use a company called Mediator Debt Solutions. This company is actually gonna go ahead and check out like what's going on, what is it, the things that you owe. They put it together. We don't do bankruptcy. There is a way that they can actually consolidate your payments. And then I remember helping this one this one agent, because we went and did a training appointment with one of his family members. We were talking about student loans. We help it with student loans as well. This agent was paying around $250 a month for his student loans. Now he pays $75 a month. He's still making $200 payments, but at that point, he's actually going to get out of that debt as soon as possible so that he can start planning for the future a lot sooner.
Awesome.
Living benefits inside life insurance policy. We were talking about this earlier. There was this situation where this agent was running for a promotion. The parents were not open to life insurance. As Hispanics, we believe that life insurance is something that it's bad luck for us, and that's something that we fight a lot. But because of our education, being professional, we've been able to help them understand and give a different perspective of what living benefits are. This agent, almost running out of time for promotion, went to her mom, said, "Mom, I just need to sell one more policy so that I can get a promotion." Mom said, "Okay, well, let me have the lowest you can have." Her name is Sari, in El Paso, Texas, and 3 months later, Mom ended up getting a stroke. Nothing bad. Came out of the hospital, everything good. 6 months later, a second stroke kicked in. At that point, was a little bit more severe. Client had to learn how to talk, how to walk. It was kind of difficult. Well, because she had gotten that life insurance policy when the daughter needed that promotion, client was able to get living benefits while she was alive. National Life Group cut a check for $40,000, and now they're not in debt. So those are a couple things. The benefit, the money and the benefit is tax free. Inside a life insurance policy, you avoid probate, you avoid everything that has to do with taxes because it's inside a life insurance policy.
So just to clear that up, how does that work with inside a life insurance policy? Say, for instance, I wanted to do that to avoid probate. How does that exactly work?
Life insurance is the IRS has a code 1077, which allows a life insurance to transfer tax free into the beneficiary. A beautiful thing about an annuity, it's an insurance product, which means that it's also classified as that code, which allows the beneficiary to not have to go to probate. The money goes into the beneficiary instantly.
Awesome. That is such an awesome thing, right? And a lot of people don't know that. So I hope this is informational to those out there. And if you have questions or online, hopefully you can type that into the chat and we'll get that question answered. But is there anybody out there with any questions that might have stirred up? Danny?
Can you explain the difference between term and whole life insurance?
Yes.
Well, let me repeat that. So he wants to know, like, what's the difference between a term and whole life insurance policy?
Awesome question. Is term will protect the person for 10, 20, 25, 30 years. A whole life, which we have the opportunity to do, we don't do many of those anymore. Now, there used to be term and whole. That's all used to be. Life insurance has upgraded, just like your cell phone, your computer, your TVs, your car. Now, life insurance has something called Index Universal Life. So it goes term, which most people would get something like this in case they have young children, they just bought a home, they have a business, they just got married, where the need of insurance it's a lot higher than when you are retired, when you don't have that many things that you have to pay and the children are already grown up. So at that point, term insurance is the best need at a younger age for a higher amount of debt benefit, but really low cost. I mean, at that point, you're paying $20, $30, $35 for a $500,000 life insurance policy. Something happens, your family's taken care of, you get disabled, any type of terminal illness, you can use up to 80% of those 500,000 and get 400,000 so that you can keep food on the table, you can keep the lights on, you can pay medical expenses, doctors are paid off, taken care of. That is term policy. Whole life, universal life, and index universal life. Now, whole life, what happens is that you get protection for the rest of your life. But you can accumulate, you accumulate interest inside of that policy, which if something happens, God forbid, family only receives the amount of life insurance that you purchased. In an index universal life, family receives the death benefit plus the equity that you accumulated with interest inside that life insurance policy. And in that, in the new type of life insurance, which is the index universal life, the money that you actually grow inside that policy is tied to the market. And when the market goes up, you get up to 12% interest in that money back. But when the market goes down, you lose nothing. So something that we feel really proud is that we hold the license that we can actually guarantee and say we are the only people in the financial sector that we can guarantee that your money is not gonna lose when the market drops. So there's 3 places that you can put your money for the future, which is the bank, the fixed accounts, variable accounts, and index accounts. The fixed accounts, we know them as the banks, checkings, savings accounts, where the money is not gonna lose. So if the market goes down, your $1,000 are still $1,000 no matter what, but it's not gonna grow. A variable account, which is 401k, 403b, 457, TSA, TSP, Bitcoin, like all this type of market that goes up and down, you can really make a lot of interest. But if the market goes down, then at that point, your pocket will suffer. I'm not saying that you shouldn't have it there because I have money there. But in the last month, I lost a couple grand just on Bitcoin. So at the end of the day, what happens is that it's known that you make money through variable accounts. All I'm saying is that retirement money should be in a bucket where you can make up to 12% interest, but when the market goes down, you don't lose it. And now there's not such a thing as an investment account, but when we're talking about retirement, I would rather put my money somewhere where it's capped to grow, but it doesn't have a way to go down. So if the market is doing 15, 20% up, then you only get 12. And the company keeps the 3 or the 8%, but you still get the 12. But when the market goes down, you don't lose money. So you give some of the upsides for none of the downsides. And that's when 0 is your hero.
Awesome. So I have a question. So if that money is an investment that's following the market, where is that money getting, like, where is it invested?
So when
It's not in the market. So where is it invested?
it's in the S&P 500. It's we have different strategies that when we sit down for a consultation, we call it the FLS, Financial Lifestyle Strategy. We see which is going to give you the best return for your investment.
Awesome. So that's a really awesome plan that good information. I appreciate all your knowledge of all that information. And if we don't have any other questions, anybody, we'll just thank Adon for his time today, and then we look forward to hopefully. And as far as if somebody has any questions or wants to get a hold of you, does it cost to do a consultation, or is that something you do just to see if you can?
We are like the Expedia of financial services. When you're looking to travel, you go to Expedia. It gives you all your solutions, your airfare, your car, your hotel. We're that for the financial sector. When you come to us, we don't charge. When we fill up applications, when we fill up, index annuities, whatever we do, we don't charge the client for any of that. Because we are taking customers to the company pays us. So we don't charge a percentage. If you do have IRS, you have like other type of investments accounts, even 401ks, like you get charged on that. You have $1 million at 1%, that is a little bit of money right there. We don't charge any of that.
That's awesome. So if you guys want to get a hold of him, the numbers should be there for you to get a hold of him and have any questions or even want to do a sit-down consultation is probably best. And so he can review everything that you have in your financial or your life insurance or whatever you want to do to take the next step for your family. So thank you, Don, for your time today. I appreciate you.
Thank you.
All right, so next up, we have our mortgage speaker today, Joanna. So Joanna Rushing, and I just want you to give like your time in the business, your specialty, things you've done, and then maybe some important information that we need because we're all, in this market. It's kind of crazy, right?
Yeah, it's a nuts market right now.
Yeah, so.
My name is Joanna Rushing. I'm with Primary Residential Mortgage, and I'm a mortgage loan officer. I've been in the business for about 8 years now. It'll be 8 years this summer. And I help people finance the purchase of investment properties and primary residence, second homes, that type of stuff.
Awesome. So what do you see today? I know everybody's always asking, what are the rates today, because they fluctuate, and are they going up? Are they going down? What's your future? What are you going to see as far as a crash, or, what do you see as far as people that are looking to buy, that are able to buy, and that kind of stuff?
Sure. Yeah, so the market is red hot right now. It's a great time to buy a house, primarily because we're looking at a lot of appreciation going forward. We saw about 17.5% appreciation last year alone in 2021, when historically appreciation has sat between 2 and 3%. So if you bought a house, it's worth a whole lot more now than it was 6 months ago. And most experts are projecting at minimum 5% appreciation this year, but more likely 8 to 10%. So even though prices are higher and even though rates are a little bit higher than they were maybe a year ago, it's still a great time to buy because you're still looking at that appreciation, even if you're paying above list price for that property. So to answer your question about rates are probably about in the mid fours right now, somewhere between 4.25 to 4.375 or 4.75, excuse me, kind of depending on your situation and how much you're putting down and that type of stuff. Which is still a historically low rate. It's not the rate at the beginning of the pandemic, but we're not at the beginning of the pandemic anymore. So we are definitely looking at historically low rates, especially if you even go back to 2018 and 19, we're right in that range. We're definitely lower than 2009 and any time before that. So if you can afford it, it's a great time to get into that business and see that appreciation regardless of the rate, honestly.
So that is a key, right? So in real estate today, as me, being a realtor, I'm just seeing that, people are always looking at the other end of it. Okay, the rates are going up. I don't want to buy, or I want to buy before they would go up any further. Or, they're using the rates to make their decisions, but they got to also take the whole aspect of the real estate market into consideration, that there is an increase in prices that's continuing to increase. They don't see, I see the inventory rate right now is one of the all-time lows ever. We're at this morning, as a matter of fact, I got right here, I printed it out. So this morning we were at 690 homes for sale. And what that includes in our MLS, that includes Albuquerque, Rio Rancho, from Jemez Springs to Placitas, all the way to East Mountains, Moriarty, Estancia, and all that, all the way to Belen and Las Lunas in that area. So that's a pretty big MLS. Plus, there's other remote counties around that we have some listings that people put in there. But to have only 690, where normally in Albuquerque, a balanced market, before this all went down as far as inventory, we had a balanced market of about 4,000 to maybe 5,000 homes, somewhere in there. And that was basically, it wasn't really a buyer's or a seller's market, but it was pretty fair. So to have that much of a difference now, you can see it's going to take a lot to build up that inventory in order to get more back to the balanced market that we were in.
Sure.
So that's just a little bit on the real estate side, so people can kind of think about the mortgage side of this as far as looking for a home, if they are deciding to look for a home today or deciding to get an investment property. How important would that be because a lot of people say, is this now a good time to buy? And they've always asked me that question. But what I always say is that, well, if you have a house to sell and you're going to buy, well, you're in the same market no matter if it's an up or a down market. So it really doesn't matter at that point. If you're a first-time home buyer coming into this market, well, it might be a little depending on your cash flow, right? And how your how important it is to keep your credit good these days and not have a lot of debt. And maybe I'll
Absolutely.
let you speak about that part.
Sure, yeah. So there's a few mortgage myths out there. One, you have to have a ton of money to buy. That's not true. We can do first-time homebuyer programs, or even, you don't even have to be a first-time homebuyer program. You can get in with as little as 3.5% down, 5% down on a conventional loan. You don't need 20% to buy a house. For an investment property, minimum down is 15%. A lot of people think that it's 20 to 25. It's not. For a single-family home, you can buy an investment property for 15% down. Second home minimum is 10% down. So you do have to have cash. It's hard to get in with no money, although we have programs for that too. But it's less money than a lot of people think. Also, people think, oh, I have to have stellar credit to buy a house. That's also not true. The minimum credit score that we can work with is a 580. We do have to have your credit up above in that 580 or higher range. And typically you want to see yourself above 640 to kind of get more of the benefits. But it doesn't have to be perfect. You don't have to have an 800 credit score. So we can work with all kinds of different financial situations, but if you're looking to buy maybe in the near future or eventually, the best thing in the world you can do is raise your credit score and save your money. The more money you can walk into the transaction with and the better credit you can have going into it, the better terms you're going to get and the more options you'll have available to you.
So so a lot of the times that people are out there looking to buy a home, and they're running across maybe some issues, be it based on how much cash they have in the bank. And so that is something I'm seeing in real estate today, and I'm sure Joanna's seeing it as well, is, it's important to have that extra money saved up today, because when you're negotiating and you have 10 other offers on the house, and you can give them a little extra more cash than maybe to come out of pocket an appraised value, and I'll let you explain the appraised value. So a mortgage company can lend you up to the appraised value amount, but there was a percentage that Joanna said that the increase was, say, 5% that they see in the future. So maybe you have that extra 3 to 5%, and it might be okay to get into this house, at least to get you into the house for now, knowing that you're going to break even at least within the year, and that it's an investment for you and your family. And a lot of times rents these days, I see them all the time, they're going up, $1,500, $1,800, $2,000 for renting a 3-bedroom,
Yeah.
2-bath house. So if you're going to pay that kind of money anyways,
Might as well be yours.
might as well be yours. Investment, getting it up in percentage. Now, not guaranteeing everything, but market has been traditionally pretty good in real estate, so it's always a good thing. So
Yeah, real estate is historically one of the most stable investments that you can kind of count on appreciation, even if it's small. Julian, you asked earlier about a crash. There are no indications that we are headed for a crash similar to 2007 and 2008. The circumstances are wholly different. So I know a lot of people at the beginning of the pandemic said, this bubble's got to burst at some point. And I think it's going to deflate at some point, but it's going to be slow because we have so much pent-up demand and so little inventory
Yep.
that there is nothing that can actually burst. There's too much built-in stability. There's also a lot more regulation now than there was, so the banks are more heavily regulated. I'm more heavily regulated for good reason. You're more heavily regulated as a consumer for good reason, which means that banks are making better investments. They're lending money to better borrowers, and so there's a much sturdier base, even though we're seeing this kind of rocket appreciation.
Yep.
Going back to what else you were saying about paying above appraised value, the mortgage company is able to lend you a certain percentage of either the appraised value or the purchase price, whichever is lower. So we have to make sure that our collateral is sound. But you can pay as much over that as you want. So if you're making a 5% down payment, then I can lend you 95% of the appraised value or the purchase price, whichever is lower. And then if you choose to come in with an extra 10 grand, that's fine. And because of that appreciation that's expected of at least 5%, you're probably going to recoup that extra $10,000 within that first year, if not sooner. And a lot of people say, well, I don't want to pay more than the house is worth. And I would caution against that. Because real estate is such a stable investment and it is a long game, if you can get in the house now, it kind of doesn't matter the terms. If that's an extra $10,000 over, if it's a slightly higher interest rate than you wanted, as soon as that asset is yours, it starts making money almost immediately for you.
Yep, that's good. So what I'm seeing is a lot of people, to understand the appraisal part of it is very important, because that's coming into play on my offers when I'm making offers on a home. Am I willing to pay the above appraised value, or am I not willing to pay? There's 10 other offers, 3 other offers. I've seen instances with 40 offers. So
Me too.
they're just, it's a crazy thing out there. And if you're not ready to buy and give a little bit extra money on a home, then it might be a struggle for you, because I've seen the frustrations of the buyers out there that are trying to buy a home and they're on their 10th offer, 10th home or whatever, and now, you know, the frustration is I need to get out of my situation, but I can't get a house. So I have strategies that I use. Most of mine, thank God, I've been getting most of my offers in and getting them accepted. There's been a few times I had to go 3 or 4 offers in by the time I got a house, but it's really up to the buyer. It's not up to me, because I can give them all the opportunities to make a better offer, but really it's up to the buyer to make that strong offer and how much they're willing to give in to that offer, because I'm not the magic, they are. So so as far as Joanna, I mean, is there any other questions that maybe somebody in the audience has? Daniel?
Number one, can you just briefly go over the impact of an inquiry on you know what I mean, and what that does to your credit and things like that?
Sure. So let me answer that one first. So the question
So-
was,
Oh, go ahead.
sorry.
Repeat the question.
The question was, what is the impact that a hard inquiry has on your credit score and on your credit as a whole? So when you apply for a mortgage, we do have to do a hard inquiry into your credit. We'll pull from 3 different bureaus: TransUnion, Equifax, and Experian. And we use the middle of those 3 credit scores, not the average, to qualify you. Now, a hard inquiry, a lot of people are afraid of, especially people with good credit, for good reason. A hard inquiry tells creditors you are looking to get new credit, not just check your credit score. So that automatically raises a very, very, very tiny red flag. That's not a bad thing, because it's a necessary part of the process. We have to pull your credit, because that's how we're going to assess your risk. However, a lot of people say, oh, it's going to tank my credit score. That's not true. Typically, we see a hard inquiry affect your credit anywhere from 0 to 10 points, and we work in credit ranges. So if your credit is between 740 and 760, it's all the same to us. It doesn't matter if you're 759 or 741, that's the same to us. We work in 20-point increments. So I would say, if you want to buy a house, get a hard inquiry. That's going to tell you where you're at. That's going to tell you if you have things to do before you can actually buy the house, or if maybe you're in a better spot than you already were, or than you already thought you were. Hard inquiry does have a little bit of an impact. It's not nearly as big as most people think.
And
my
this
other question is,
second-
how are you and your company helping your buyers stand out in this heavy sellers market?
So the question was, how am I and my company helping buyers stand out in this seller's market? And that's a really good question too. So like Julian said, we all have strategies to make your offer stand out among the 40 offers that the seller's looking at. And it's a combination of a lot of different things. Having a really good realtor on your side. Julian is one of those.
Thank
He
you.
knows what he's doing. He's been in the business a long time. He's got a good name. He's got a good reputation. And Albuquerque is the biggest small town ever. Reputation means almost everything. And so I work for a company, Primary Residential Mortgage, that has built a really strong reputation in Albuquerque and the surrounding areas. And so we have built our brand on service. We do a good job. We write pre-qual letters that are almost as good as approvals. And I try to help educate my buyers as well to say, hey, in this market, we're going to need to be able to, spend X amount of dollars. These are kind of what you're looking at. I want to educate my buyers so that they understand what they're walking into, so that they can kind of make the best financial decisions possible. And then I can throw my name and my company name behind you. And I've had offers accepted simply because my name was on the piece of paper.
Yeah, and that's very true. Um, a lot of these people are coming to me with pre-qualification letters that are from companies online, which never have reviewed their information. So what happens is, they insist in using them, which is fine. But what happens is we get to sending that offer in, and they have other offers, however many that may be, and they look at them, and the realtor on the other end understands that these online mortgage companies are not always good paper, I would say, as far as their written pre-qualification letter. So they will tend to not go with them and more go with a local a mortgage broker. So I see that a lot. And then also they tend to not even have, and I've gotten them where they haven't checked they've checked their credit and they said, you're good. They checked based on what you said, you have good income and everything else. But then I do my taxes and I might not, maybe I think I make this much, but by the time I send in what I've, the stuff that I've written off, I only made this much. So then I say, oh yeah, I made this much, and I send it in to Joanna, and then she says, well, wait a minute, you only made this much and you told me this much. So now I'm getting those letters from other companies and they hadn't checked that yet. So then we have a problem, right? We have an offer accepted and now we can't get the thing closed. So I hate to get myself in that situation, and I hate for my buyers to be in that situation, but that's why I highly recommend that you use a local, trusted lender. Joanna is my trusted lender that I use, number one, and to get the job done. I know when she says, yes, Julian, go look for a house at this price, I'm going to close at the end of the day. And getting into this business in 2003, I've had every lender that you could think of wanting my business, taking me out to lunch, and then finding out they couldn't close, and that was the heartbreak, right? So it made me look bad, and like you said, it's the largest city, but yes, yet a small town. The word gets out, hey, don't go with Julian because my deal fell apart. Maybe it wasn't my fault, but maybe I should have used a better lender. Maybe it was my fault. So that's why my lender is the most important thing to me, because my clients are the most important thing to me. So, and the same with Joanna and everybody that's here today. So that's the reason why I have these people here, is because their clients come first in this business. So if there's not any other questions, is there any other questions?
Sure.
Okay.
First one, what's the difference between prior auth and prior or like a pre-approval?
Sure.
Do you do both of those letters?
Yeah, so the question is, what's the difference between a pre-qualification, I think, and a pre-approval? So a pre-qualification means that we have generally done some work up front. Depending on the lender that you go to, a pre-qualification can mean almost anything. It can mean, hey, we talked to you for 3 seconds and wrote you a letter. At my company, a pre-qualification means that I have pulled your credit, reviewed your credit, looked at your income, looked at your assets, talked to you on the phone, done all of my due diligence. I have done everything but underwrite your file. I've also sent you through automated underwriting, which is a program that we have that basically takes all the information that you and I have input together and then spits out a recommendation of, yeah, this should be approved, or no, this shouldn't. A pre-approval, a true pre-approval, and people throw that word around all the time, means that an actual underwriter has looked at the file and has given approval on the file. Most people don't do pre-approvals for 2 main reasons. 1, it takes a lot of time and resources. But 2, if you have someone who has done their due diligence on the pre-qualification, a pre-approval is not necessary. So I will send people through for pre-approval if there's something really weird, really out of the box, really borderline. If I don't think it's going to get approved, or I have any question about whether or not it'll be approved, I will send it to an underwriter to review. I think I've done it maybe 2 or 3 times. Everything else, I stand behind my pre-qualification letters very firmly. And as a result, I think out of the 150 or so odd deals that I've done in the last 3 years, I haven't had a single denial. So a pre-qualification is only as good as your lender. But if you have a good lender, a pre-qualification is as good as a pre-approval.
Okay, makes sense.
Awesome. Another question?
Second one is, we own our home or paying a mortgage on it.
Okay.
At the time, we only had, I think it was like 12% down, so we have PMI.
Okay.
But the interest rate, I think, is below 4%. Would it be worth trying to get another loan to get out of the PMI that small?
Probably not. So the question was, he put 12% down when he originally bought the house. Interest rate on the entire loan is under 4%. Is it worth it to refinance to get rid of the PMI? PMI gets a really bad rap. And I love PMI. I think it's absolutely fantastic. PMI was created because historically you had to have 20% down in order for a lender to lend you money. Then they said, wait, I bet we can make this better for people, and you can put less down, but you have to carry insurance between however much money you put down and the time when you get to 20% equity. That insurance only protects your lender. It does not protect you. But the benefit to you is that you no longer have to have 20%. So you pay that little bit of insurance. It's on a sliding scale depending on your credit score in most cases. So if you have stellar credit, your mortgage insurance is dirt cheap, especially now. It's only gotten cheaper as the years have gone on. So to refinance your house now would probably raise your interest rate, would probably raise your total monthly payment. You would also add to your loan balance because there's always a cost associating with refinancing, which means your monthly payment probably would either stay the same or possibly go up, especially if you're going to try to keep the same term, if you have, say, 25 years left or something like that. What I would encourage you to do instead is talk to whoever's servicing your loan right now and say, hey, I've got plenty of equity and I want to get rid of my PMI. And they'll say, great, order an appraisal. It's going to probably cost you $500-600. And then once they confirm your equity, they'll drop the PMI for you. And then you can save yourself the $5,000 to $7,000 that it costs to refinance. You can keep your rate that's below 4 because you're probably not going to get that again unless you go to a 15-year mortgage. And you get rid of the PMI. And so a refinance sometimes is a great thing. I helped this adorable little old lady stay in her house just last month, saved her $300-400 a month in cash flow by paying off a credit card using the equity of her house. She doesn't have to get rid of the home that she lived in for 25 years, raised kids in, had a happy marriage in. Her husband passed away about a year ago. She was going to have to go somewhere else because she couldn't afford her mortgage anymore. For her, refinancing absolutely 100% made sense. I talk to people all day long who say, here's my situation, and I look at it and I say, do not refinance your house. There is absolutely no reason for you to do so. Here's the other steps that you should take, like this one. Go get an appraisal, get rid of that PMI. It's probably not very expensive, is my guess, your PMI, but the appraisal is going to be a much better route for you. And that's generally what I try to do, and Julian's seen it too. If it's not a good idea for you, I'll tell you not to do it.
Okay, I appreciate it. Thank you.
Absolutely.
Any other questions? And we'll wrap it up with Joanna here. Well, I appreciate you coming out, Joanna,
Thank you.
today. And that was very good information that she has. And of course, if you guys have any other questions about mortgage rates or whatever's going on today in the mortgage world, you can contact Joanna or me.
Yeah,
and
please do.
as far as that goes, we work together. So if there's any other questions that you may further have, you can give her a call. I think the number's there. And also there's information for the people that are here in the back. So we will just thank you for coming today.
Thank you. Appreciate it, Julian.
And we'll move on.
Thank you.
Next we have up Leah. She is with Fidelity National Title, and she's my title lady that I go to all the time when I have questions or marketing or whatever it may be. But why don't you give us today your background, your years that you've been with Fidelity, and what you actually do for them?
Perfect. So my name is Leah Saavedra. I have been with Fidelity National Title a little over 13 years, and I am a sales executive for Fidelity. So I am not an escrow officer or I'm not a title examiner, but I kind of have seen all avenues of escrow and title and help clients, understand what title insurance is and what our product is. I graduated from the University of New Mexico in 2013, and I absolutely love Fidelity and love, working with agents like Julian. And probably some of you are probably wondering, well, what is title insurance? And hopefully, you guys have probably closed with a title insurance company if you've bought in or sold or refinanced a home. But title insurance will protect your title that you just purchased, or you are refinancing, or you are selling. And what that means is we will examine that property. We will take a look at those public records. We will make sure the person that you're buying that property from is the correct owner. We will make sure that any outstanding mortgages are paid off, any judgments that are up against the current owner are paid, and any other types of liens that possibly could be on the property are taken care of, so that when you acquire that title, it is free and clear, and it is in good standing for you to be the new owner.
Awesome. I'm going to give like an kind of a scenario or a situation that's happened, because people don't understand how important it is to have title insurance. And I've seen situations happen in my past as far as liens popping up. And so a person was buying a house one time, and the actual lien came up on the house when we went to purchase, which was a foreclosed home. So you would have thought the attorneys on the foreclosure would have found it, but they put it on the market, not catching a lien, which was a lien from a neighbor, believe it or not, and it wasn't meant for the house that I was selling. But the lien popped up, and thank God that the title company found it, because you close on a house without a title insurance, and there's a lien on a previous owner or wherever those liens may have come from. I'll let Leah explain more of a situation and how that can be most important to the people.
Yes, so title insurance is very important. And, in any type of state, but specifically here in New Mexico, a lot of family members will deed, other individuals into title, their sister, their brother, their grandmother, their aunt, and that can mess up the chain of title. And when that happens, stuff can be assigned to that property, like a judgment, a lien. Now, in this case that Julian spoke about, that was done in error, that lien came up for another property, but was assigned to that property that he was selling. Now, our title examiners will examine that, and the great thing about title insurance is we do not insure an actual property address. So you might live on 2404 Dorothy Street Northeast, and that's great. However, we will only insure on the legal description, the physical legal description that is a part of your tax bill. You see on that UPC number, you'll see that legal description. That's what we're going to insure on. So in that case with Julian, for example, if that was done in error, it might have shown 2404 Dorothy Street Northeast, and that might have been that property that Julian sold, but we need to take a look at that legal description, make sure that is correct for that property that Julian is selling. So title insurance is very, very important, just because real estate is the most biggest investment anyone is ever going to purchase. So you want to make sure that the stuff that you are purchasing is in good order. And seeing a lien, say for $50,000 or, $20,000, you don't want to acquire that, as you being the new owner. So title insurance is very important. We are regulated by the Department of Insurance. So all of the rates are completely the same amongst all title companies, and it's a one-time fee. So if you are going to be selling to your daughter or to your aunt and keeping it all in family, that's great. And a lot of people will just sign the deed right over, but definitely always go to a title company. They'll do the search. You'll pay that set fee, for example, for a $200,000 house, the title policy on that is, about $1,100. And then you have a few other fees. So probably altogether, closing costs $2,500. But to understand and to make sure that the new buyer is taking in good title is absolutely a need.
And just so everybody knows that most of the time title insurance is, of course, negotiations through real estate. And these days, the buyer usually doesn't pay it, but these days may pay it, just depending on how you want to negotiate the deal. So most of the time, sellers traditionally were paying the title insurance and all this, settlement fees. But these days, that's another option that the buyer can put in there for the seller to accept their offer. So
Absolutely, and it makes your offer a little bit stronger, kind of thinking out of the box, just like what Julian and Joanna had talked about. Title insurance, it's not going to be, an extra $5,000, $10,000. That policy, depending on the purchase price, that's what is based off of. But, for, say, $1,500, and then you get the house compared to, a house that's getting 24 offers. But, for a seller to see, oh, wow, they're going to pay for the title insurance, it just makes that offer so much more attractive to the
Yes.
seller.
Well, thank you, Leah, for that.
You're
And
welcome.
what I wanted to do now, is there any other questions about title insurance out there? Is anybody on the chat or?
I did want to say, you guys, because talking about, since Don is a probate and real estate attorney, we get a lot of questions about deeding. I need to deed my daughter into title because I'm going to be sick, or I need to deed this person into title. Of course, the owner can do that themselves, or they ask us to do that. We don't suggest them doing that just because there is a liability aspect. If that chain of title is not done correctly, then that can mess up, when they go and sell the property. So we always say, consult with a real estate attorney. They will make sure, they will take a look at that chain of title, and then they can, for a small fee, they can issue that new deed and get it recorded with the county assessor's office. So that's one tip that I say, always do.
Yeah.
Okay.
Thank you. And just one last thing on title. There's people out there that are running across a loved one passing away or whatever, and they want to see if they can get on title maybe before that happens. And there's a lot of different things that have to be involved if they're at the hospital or sick or whatever, and they can't get off the bed or go sign anything. That makes it very difficult. So these kind of things that we're just going to ask that you just call us, and we'll get you to the right professional and to handle that situation, whether it's an attorney if needed, or title if I need to ask title, situations like that. So if I think we're pretty much about done. Is there anything else that maybe you could think of?
One other thing is, if you do own a property and you are worried about, how you are in title, whether it's with, possibly your ex-husband or your current husband, or, you want to put it into a trust and you need to see how you're currently in title, give us a call. You could call our customer service department. It's here locally. We could pull your most current vesting deed and you could see how you are in title. Okay? Because, for example, a lot of married couples, they'll go into title and hopefully they're in joint tenants. So it's a warranty deed in joint tenants. And what that means is, if one passes, then it will go to the surviving party. However, sometimes, back in the day, if it was, in the 60s, 70s, a lot of the time they weren't joint tenants. So that could, cause a probate and other things like that. But just give us a call. We can pull your most current vesting deed so that you feel comfortable as to how you are in title.
And if you are thinking about selling today, of course, I can prepare or get a actual listing package.
Yes.
Which I always do for a listing. So if the person's not sure, or I need to make sure that there's no liens coming against that home, or I want to make sure that there's enough enough money after you sell the house left over to make sure that we can sell the house and not have the upside down issue.
Any issues, yes.
So
exactly. And for Julian to get that listing package, you guys, that comes from our customer service department. So what that is kind of like a preliminary title search on your property. So if you are thinking about listing, that's really an awesome tool that Julian uses, because that will give you the most current vesting deed on the property, any open mortgages on the property, any liens, such as HOA liens, water liens, stuff like that, as well as the plat map and CC&Rs. And we will do a name search on the owner's name. So that will take a look at federal and state tax liens, as well as other liens and judgments that could be associated with credit cards or non-payment of other things. So that's a huge benefit, because that could delay closing and that could delay the sale of the property.
yeah, and then just so you know, so Leah helps me with all that, and that's why I have smooth closings at the end of the day, is because of all that information coming out up front. And we kind of like we don't like surprises here, so
No, definitely not.
along with Joanna, And so we make sure that the deal's closed, and that's how the smooth closings come, and people say, okay, I want to refer you to so-and-so, so.
Exactly.
But thank you, Leah, for
Thank
coming
you
out.
so much. I
And
appreciate it.
Thank everybody for coming out today, and I think we'll wrap it up now, Daniel. And thank you guys for showing up, and if this will be recorded, so we can always send this out if you want to give it to a friend or family member or neighbor that's going through situations and maybe needs this information that might help them, and they can always call us as well. Thank you. All right. Is that the countdown? All right. I think it was very good today. I think the knowledge that this had today was just